Gotta love it, right?
You know what I love the most though? And I love that we're recording right now. I love the look on your face when you showed it to me.
Yeah, like the pride. It's like, yes, I
No,
did that. I did that in the sauna at 4 a.m. this morning.
I did that in the sauna at 4 a.m. this morning. That's
Yes.
what you just said. No, I love I was looking at the video when it was playing, but I was also looking at your face, and I like you just totally lit up. You know, it's funny how um, this is a topic for another day, but the value of face-to-face interaction versus what we're seeing with technology and AI, where so much is efficiency, efficiency, efficiency. I don't need to meet with you face to face. I can do it through emails and text messages and
Yep.
automation. And but there's value to the human interaction. And so, like, I got more excited about that video because I saw your reaction, not just my own reaction. You know, the opposite of that. So yesterday, Nikki, my wife, we went to dinner with friends, and on the way, it was like an hour drive. I was exhausted, you know, after work.
Oh yeah.
It was like an hour drive, and she reminded me that we were doing a quote show after
Yeah.
dinner, but I didn't know what the show was. And my body language was horrible. Like the second she said that, and so then that puts her in a bad mood because now she thinks she tried to do something nice, which she did. And I gave her a bad reaction, which I did. And it
Yep.
turned out it was fun, but it was a reminder of you can't get that through technology and AI. So yeah, your
Yeah.
reaction was good. All right, well let's kick this off.
Yeah.
Okay, this is gonna be fun. Episode number one. If we're even calling it an episode, you know, whatever. The the goal here being for us to like just pick a topic every other week and let's just knock it around. You and I do this anyway. This is what's so much fun also about this industry is that you know people that know you know what you do and the value that you represent. People know me and same sort of thing. But we have these conversations that go off the rails sometimes, and those are the best. And you're the guy that's in it. You're the talent. You're the total expert because you're actually doing these things on a day-to-day basis. I'm experiencing through hundreds and thousands of other people that give
True.
me their thoughts. Okay, so let's just grab a topic and no prep, no nothing, and just get after it. Okay,
Yep.
I've been seeing a little bit of this lately, and so I think it's a good timely topic. Who owns the customer? And here's how I'll table it, and then I'll just ask you a question. Who owns the customer when the originator changes companies? So when there's actually when that question becomes a legit and look, this can be a whole nother episode. We talk about who owns the customer even inside your own organization. If you've got consumer direct or a servicing retention team, but let's not do that. Let's just say Abdel, who by the way is a proud loyal member of PRMG, and for those listening that are executives of the company, this is fully hypothetical. He's not leaving. He has no intention of leaving. But let's say that day came and you've got this wealth of a database, which by the way, I hate that word. We can talk about that in a minute.
Yep.
Who owns it? What do
Yeah. I
you do
mean,
with it?
from a data side and privacy side, right? Technically, it's the bank, right? It's the lender, it's the institution. They're the one taking the risk from a financing perspective and all that fun stuff. Servicing rights, depending on their employment contracts, which most of them usually obviously include that. Now, obviously, I'm going to have somewhat of a one-sided focus on it, being a hyper-focused originator and being a relationship-driven professional, right? There's two sides of the business. You said it very quickly, right? B2B, B2C, right? I think B2C, it's so easy for you to be like, whatever, right? I got it from, ABC lead source or XYZ lead source. There's no real maintained direct relationship with it versus when you built a personal brand where that client is gravitating to you or that referral partner is gravitating to you in order to ensure that stuff, right? Um, when you're generating your own individual lead flow, right? Not just from online lead gen, right? I would say it's usually easier for the originator to be like, that's my client, that's my database, right? Um, it's a topic of conversation, obviously, because the most common time that people move is generally, I think it's February, March, and then I believe based on some data source that I've seen, then I think it's October or February, March, and September, October, and you, out of all people, are the expert in terms of where people generally move. Because then spring and summer hits, at least here on the East Coast, and then we're not shoveling through fucking 2 feet of snow.
Right.
And But yeah, to answer the question, I would obviously be biased and say the originator based on my individual book of business and my individual model. And I know for a fact consumers are not working with me because of the four letters on my chest, right? They're working with me, because of us and our operations and our stack and relationships and curtailed. And when you see other I've got, just like most of us, we've had loan officers come and go. And I know we get the sales boomerang or now consumer intelligence, right, with Total Expert. And I see the link and we respond back, right? I own the branch and it's like, hey, just saw, our approach is, hey, dude, I just got a fraud alert that your credit was ran elsewhere. Everything okay? And it's me knowing that they've ran their credit somewhere else. And
Sure.
yeah, actually, we're working with John Doe, who was on the team, and then you try to say, hey, that's awesome. If you ever need a courtesy second look, as a just from a value offerings or whatever, you'd be more than happy to do it and kind of keep it moving.
So can I interrupt? Well, I'm going to
Sure.
interrupt because that's what you and I are going to do on this. It's
Yeah,
just we're just yapping. Okay, I agree with everything you just said. I also read a statistic, JD Power statistic, that said 71% of customers say that they work with the person over the company. So
total.
that's the customer speaking. And for the sake of this argument, for the sake of this score that we're settling, the we're talking distributed retail. Let's not say consumer direct or a call center. It's what you do, right? And
Sure.
it's what your team does. And most of the
Yeah.
people that we know. Let me take counterpoint. And I'm not saying that this is what I believe. Let's just take counterpoint. So the company though spends the money to
Sure.
build the manufacturing. And when I say manufacturing, that's processing, underwriting, closing, funding, shipping. That's all of that. But it's also the tech stack. And I realize that originators could say, well, hold on, I invest in my own tech stack also. The company pushes that cost back to me. It hits me pre-tax. So I have some ownership of that tech stack as well. I agree, but that's a shared investment, certainly. And from company to company, it's very different. But the company is assuming the risk from a funding perspective. They're the ones with the money. And then they do build the mousetrap relative to the manufacturing of the loan. Now, I understand, Abdel, you're going to say, well, hold on, locally, I control a lot of that manufacturing, and so do some of my others. But the truth is, it's a subset of the enterprise manufacturing, I think is fair to say.
Yeah.
So in addition, who's the customer signing documents with?
The
Right,
institution.
that,
Yeah.
the institution, that's right. So there's that argument as well. It's not a problem until someone says I'm leaving, and then there's this fight over this quote
Who owns the data?
database. Well, yeah, and you bring up another point, which is, I mean, you mentioned the you sort of public record, right? I mean, a lot of this data is public record. The LO doesn't own the data. The company doesn't own the data. So there's ways to get it. I mean, certainly with model match, we know this. I mean, you can easily rebuild the database with our platform. It's no big deal.
Wait, you
But this
mean when a
idea,
loan officer tries to come on the team and you're like, hey, by the way, this is your entire database right now, and this is everybody that's turned you, and this is everybody that you've stuck with you, and this is a
yeah,
very small fine print of the stuff that we're going to give you when you join our team. That
which
that
which 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 makes the conversation different, that right, than it
yeah,
was 2 years ago when those things
exists.
didn't
Yeah.
exist. So this idea of ownership is a really interesting thing, right? Because it's that balance between the process and the anecdote and the emotion, which leads to trust on the originator side, versus a contract, which is on the organization side. And part of that contract, it's a legal agreement that is in place because of, hey, we are the money and we are the manufacturing. When you look at it from that perspective, does that change your opinion on ownership? Because it sounds like you feel like, I mean, from the originator perspective, I own my customer database, is I
Sure.
think of what I'm hearing from you.
Yeah, I mean, listen, I'm always going to have my side of the that perspective where it's my client, my data. The client can give two shits if they're paying company A or company B, right? It's a
Mhm.
reality. I mean, we have to conform by Fannie Freddie guidelines because they're going to get sold on the secondary market, and normally instantaneously before the first payment or sometimes second payment is due, they're now paying, servicing company A or B, right? Now I get the time, the perspective it takes to build a business, and I totally respect that. And I'll tell you, obviously, I've only been with PRMG, right, in 8 years. So I've
But
never
but
had,
but 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 the flip side of that is you've had people come onto your team that have come from other companies.
yeah, yeah. And,
Yeah.
luckily we've never had an instance where it's like, hey, this was our client and don't refi him, or this was our system and don't do whatever. So there's definitely two sides to a coin. I also think depending on some institutions turnover rate is a little bit higher, being completely transparent on it. So they maybe become more versed in that side of things in terms of just, well, you put your data in our CRM, or we did a deal, so it's now ours. And I feel like, settling this score, it also kind of makes that originator know, because it's public data, right? Where if you start seeing one company, mention the word lawsuit or litigation, and it's public data, and I search that and I want to move to ABC company, and I see that that institution has filed a litigation against this LO because of him, however you want, whatever you want to call it, right? Bringing their database or going after that database and stuff. If I'm a loan officer, I'm be like, fuck that. I don't want to go there. And it's sad to say, and it's always going to be a topic of conversation. But I would still side by to your points, you said 71%. The consumer agrees. I'm actually surprised. I thought it would be higher personally. But I'm not shocked that it's more geared towards the originator perspective with the relationship rather than, to your point
Rather
where,
than the company, for sure. So another statistic I saw, and I don't know how, I guess I don't remember how dated this is, but I think Stratmore put out a statistic that said something like only like 20% of borrowers refinance with the original originator. Now, that's not the statistics I see in Model Match. When I go in and I look at churn rates as an example, and I know you look at that, both originator churn rate and company churn rate, and even market churn rate. I can go into Charlotte, North Carolina and say, what is the churn rate for the entire market? It's generally somewhere between 25 and 35%, which
yeah,
is still a ridiculous number, which then leads me to okay, maybe a transition, but within the same thing. I'm familiar with a group that left a company recently, and
hmm
there was a pretty big deal. And the company starts going after the database. They immediately push everything towards the consumer direct group. They just go hardcore. We're going to blast every one of these customers.
sure,
And then the people that left, they're managing it maybe a little bit different. They're cherry picking. I'm not going to hit all of them. Of course, I'm going to send out a notice that says I've changed companies. If you need me for anything, let me know. This is where I am. Everything was done professionally, by the way, both ways. Nobody stole anything. It was done the right way. But the argument, but the energy is still now, who's going to protect the asset? Because this is an asset with legit equity value.
totally.
So what started happening though was customers started texting the originator saying, hey, I'm getting calls from this consumer direct group, and I'm basically telling them to piss off because you're my guy.
Yep.
Now, but that only works if you do what so many aren't doing, which is maintain the relationship with the customer. So I guess my argument would be, no, you want to know who owns it? It's the one working it. Maybe.
Yeah.
I mean, that's the struggle here, right? Is that there's a legal argument, and then there's a what is right argument, and then there's a what does the consumer want argument. And all of that falls back to process, which is something I know you're really good at when it comes to, hey, I don't just build trust. I'm going to maintain this relationship so it doesn't churn. And so, gosh forbid, something happens with the company you're with, or you need to make a change. You don't have to go after anybody because they're already going after you.
Yeah. And I think you know, I am not a refi driven lender, as you know, right? There's these some of these servicing companies. I mean, it's wild, but I guarantee damn well know every single consumer what they're being offered. I'm giving them my honest advice as to, because respectfully, I don't want to work for 30 basis points or 50 basis points, right?
Mm-hmm.
I'm a purchase money driven lender, unless it's cash out, right? Then I love that, because then I have something truly of value to sit there and put in front of the consumer, and do that stuff. Um, But I think it again, it goes back to your point, right? Where when you're in a position where you actually have talked to the consumer, there's a follow up there. There's a system, right? We use FinLocker, so shout out to Brian, his team with that stuff. We've got Homes NJ. It reroutes right to our FinLocker link. Every consumer signed up in the initial touch. We've got obviously MBS Highway with home reports, right? That data is going in, and I'm watching this shit. Like I have a teammate specifically responsible. I call her our engagement specialist. She's the one that makes sure I have 30,000 checklists. So she's the one that ensures like this is done. A deal has closed. Okay, now they have to get added to here. Now they have to get added to here. Now they have to get added to here. If they're a real estate agent, now they're added onto our list report so we can make marketing kits for them every single day. Boom, boom, boom. Same thing with the consumer, right? It's somewhat of a battle. Obviously, now interest rates are dropping fairly quickly, right? Or I like how there are right now, where they're like bouncing between,
Yeah,
the
not
high
this
bond.
big fall off a cliff. Yeah, we don't want that.
Which is
Well, I
great
don't.
because from we don't want it from EPOs, we don't want it from
Yeah.
home value perspective, we don't want another 22, 23, correction that takes forever to fix. Um, but it's a great point, right? I think it's conversations when I talk to loan officers all the time. My first conversation with them, and I would have run the data right on Model Match, so I know you better than you know yourself, Mister Originator. And the conversation that I was going to say, and I didn't want to interrupt you, was when that originator thinks that their database is as loyal to them as they think, and then you look at it and you're like, yo, bro, like your clients are all refinancing you, right? And again, I know for me, they probably are, and I'm okay with that, right? Because I know it's not done because of a value perspective. I know it's done because of a just simple cost, and servicing companies can snatch them up and take it from there, and I'm okay with that, right? Um, but I always ask the originator, where's your book of business coming from? Because that you can't really quote unquote run the data on, right? We're just seeing
Yeah,
numbers. You're putting
yes.
it flowing in. You can't
Source
see the
is it?
story. That would be
That's right.
fucking cool.
Yeah.
And I asked him, do you one of my favorite questions is, do you know the percentage of your source of business? Like if you asked me, I know in 2024, 41% of my business came from realtors, and in 2025, 33% came from realtors. And that was done on purpose because I had 3% in 24 came from financial advisors, and 10%, so a 7% increase came from financial advisors in 25, because I knew that was a market and a niche that I wanted to start increasing my book of business. Um, so I asked the originator, and they're like, well, I do a little bit of this, a little bit of that. And I'm like, okay, well, that's a problem. We need to first identify where's your business coming from, because you might be spending too much time in one aspect of the business. And then when we turn around and you're like, oh, shit, and to a point where that realtor is not as loyal to me as I thought they
Right.
are when you run Model Match, or that consumer is not as loyal to me as I thought, or company ABC, I thought I got really cool stuff, but it turns out that this is just stuff that I had a conversation yesterday with an originator in our company who we heard that they were talked to somebody else, right? Another large IMB. I get a phone call from leadership, and they're like, "Bro, can you do me a favor? Can you call this dude?" And I'm always PRMG die hard when it comes to that stuff. I'm like, "What's up?" And they're like, this LO went and talked to company ABC. No harm, no foul, right? Everyone's open to talking to somebody, and they're like, mind blown as to like what this organization is sharing with them. And then as they're speaking, the LO had the respect to come back to our, their branch manager and their regional and say, hey, this company's got this and this company's got that, and blah, blah, blah. And why don't we have it? And then obviously, our corporate perspective is like, well, we do, right? But what you're also talking about is stuff that you kind of need to curate from your own stuff too, right? Where I've got Model Match, and I've got Total Expert, and I've got FinLocker, and I've got Sales Boomerang and Mortgage Coach and MBS Highway and fuck, what else, right? A plethora, and you and I both know PRMG, amongst many other institutions, generally will throw that canvas of platforms and give the originator the autonomy, right, to pick and choose. But I told him, I'm like, dude, we got all this shit. My question to you is, what do you want, right?
Yeah.
Like, what are you looking for, right? You got to break it down. And I literally told him, like, do you have a pen and paper? He goes, no, I got it. I'm like, no, shut the fuck up and grab a pen and paper and let's go through this. And I'm like, you got your sales, you got your service, you got your support. And then from your sales, we're going to break it down. And I'm coming back to our point. From your sales side, is it B2B or B2C, right? Because if it's B2B, you're a beast, right? That's what all of us want to be. If you're B2C, you're also a beast, but you better have money, right? Because that consumer acquisition, right, costs money, right? Whether it's Zillow, Realtor.com, Lending Tree, whatever sponsorships that you're doing on your own or with a real estate agent. Then on your service side, to that point, is how are you servicing your clients, right? Do you do the old pass off to a processor of a baton? You better damn well make sure that your processor is a monster at communicating, right? Because the number one complaint of where we go after a lot of market share of our competitors is they're beast originators. They probably do 100 times more volume than your average Joe Schmo LO. But Joe Schmo LO communicates, talks to the agent, to an extent passes the baton from a behind the scenes perspective, but is talking to their consumer, talking to their agent. So in that perspective, I think who controls the data? Bringing it back to the original question. I'm going to be biased and I'm going to say the originator. Yes, it was manufactured. Yes, they have a hub. Yes, they have brand. Remember, I've got 2 branches, right, in Jersey alone. So, and others outside. So I want to always say me as the institution, as the company, and if it came down to it, right? But the last part is the support, which is your social, right? So you got your sales, your service, and your support, your social media, your online presence, your digital footprint, your brand awareness, right? Can people attribute you to your organization? I've closed deals where people did not even realize that I rep 4 letters on my chest. They thought it was Got Mortgages, right?
Mm-hmm.
I've had agents who we've met and we've done this, and they didn't even realize it was PRMG until a bomb video from Encompass went out, and then it has PRMG in the corner left. I'm like, oh fuck, I didn't even know you were PRMG, right? And it's okay, right? It works 2 sides to the coin. But I know, to our main point of the question is, if I contain that client experience and control that client experience, I damn well know that that relationship with the consumer is going to translate to the person who controls the data. You control the relationship, you control the data.
So tying it together and closing this one out, and this was great because in your monologue you just gave, I wrote down 3 more scores that we can add to our list for future conversations. The kind of tying it together, everything you just said, if someone is doing those things, you actually don't have to worry about this question. That's kind of what you're saying. And then to put a bow on it, if we just look at the question, there's the legal side of it, and then there's the practical side of it, which involves a human being. And the answer is not the same, depending upon which side you look. The problem lies in the gap. And AK, what you just did was you identified the gap. It's up to you. I like to say, own the data, own the opportunity, own the relationship, own the opportunity. That was a great way to tie it up. All right, let's close this one out. We'll pick another score. We'll settle it next time. This is awesome. Love you, dude.
Awesome. Thanks, bro. Talk to you soon. Peace.